Welcome to the 2022 Economic Depression and Preparation 2023, Economic Depression and Preparation channel. Thank you for joining me once again on this brief weekend edition, March the 4th, 2023. As we predicted, the housing and the credit crunch continues for many Americans, all of us across the zone here, and things are beginning to slowly tighten up, not quite into depression territory, but definitely into stagflation territory. We're going to be talking about all of that briefly today or tonight, this evening. Thank you for your support. Thank you for listening. Please be sure to continue to subscribe for the latest economic news here and sometimes abroad in other countries. I appreciate everyone's support. I read everyone's comments, and they're very good and very insightful as well. And so right now we're going to get right into it, ladies and gentlemen. We have household debt record $16.9 trillion last quarter as consumers loaded up their credit cards. So many people, while being diligent and having trying to secure resources for our family and friends, debt continues to be a problem both on the personal level as well as on the corporate level, especially with interest rates going up super high. It's causing more to maintain those car loans, those personal and home improvement loans. The interest rates are just going up tremendously high as it continues to soar. So now we have a situation here where many people are loading up credit cards because credit cards are unsecured debt, as you know. It is not tied to some type of collateral, and many people are loading up credit cards sometimes for good reasons. They have a family emergency, or they need to get more survival prepping supplies, and they're loading that up versus taking money out of their savings or the regular expenditures for the month. So not all of it's bad, but there is a concern because this means that the dollars are continuing to mean less or be valued less. The dollars in our wallets continues to be devalued, and this is a sign of the times because the housing market is headed for a crash, according to MarketWatch.com. One mortgage veteran said it all depends on, quote, how high rates go. Will they get the Paul Volcker's 20% rates? We're not too sure about that, but we do know that the rates of mortgage rates as of this week are above 7.3%. for a 30-year fixed mortgage. That's big. Now, that's if you have a great 750 or above 800 FICA, 20% down or 3.5% down, or however you want to cut it. That still means that the rates are high. Now, that means, you're talking about a $400,000 loan or a $500,000 loan. You're looking at a payment well up north of $2,500, $3,000 a month. For some of these mortgages out west and these jumbo loans and things of that nature and some of these states that people are moving to. And so we're wondering here, one of the things that I'm wondering is how is the mass exodus of people from California, Illinois, and these people coming into the Sun Belt, Florida, Texas, states like that, Nevada, how is that going to affect the housing prices? Right now we've seen housing prices going down about maybe 10 to 15%, but so far we haven't seen that big sale drop, that deflationary drop in those areas. And as you can see, the Case-Shiller index, home price index, it shows big markets here. You see Miami and Tampa still have a long way to fall. They were up, 60%, 70% here in some of these markets. You had a bunch of empty condos in places like Miami, these skyscraper condos that were empty that they were building. I'm sure many of you saw it in DC, Chicago, Detroit, San Francisco, the same thing. So all of these big time cities, gateway cities, have a long way to fall in terms of housing prices. And you know what, I know it. It really should be about a $50K discount to a $100K discount on some of these prices, that the speculation that's run up since the year 2009 and to now. But will we see that? That's the question. So let me know what you think in the comments as well. I think that we will, but it's going to be a slow decline down to that level, unfortunately. Now, in the Eurozone, for our folks in the Eurozone, Germany, France, England, the UK, back towards, Romania, over towards all these countries, the Eurozone inflation softens a bit to 8.5%. So they're just ahead of us in terms of inflation, as the ECB, the European Central Bank, signals interest rate hiking is not over. So we know that interest rates are hiking throughout the world here, as you can see. And this means that the main things that are going to be hiked up is food, gas, necessities, and of course, I think rents and mortgages will stabilize. The price will stabilize in rents because the demand is going to be there. Demand is going to soften for rentals as more people are going to band together, live together, more families, 3 and 4 people, multi-generation families live together to help save money. Or some people are just going to get RVs or one of those tiny homes or campers. That's becoming popular, they say in the media, and that's going to help save some money and costs in terms of that, because mortgages and rents are a big expense out of most people's paychecks. That's at least 60-70% so of the expenditures there. So the eurozone is going to continue to follow the dollar here. As you can see the chart here, it was up to 94.93 against the dollar, up about a little quarter point 1 percentage point there. But it's going to follow. The bank's going to continue to rise interest rates this year and next year, and that's going to mean higher cost of borrowing. If you have to get a car, make sure you get a used car, something that's 3 or 4 years older than the sticker price, a new sticker price, or just get a 10-year-old car. Try to get as less miles as possible. Somewhere around, maybe, 80,000 miles or 70,000 miles. If it's a Honda or Toyota, should be good for another 120 to 200,000 miles anyway. Or if you get a Ford or electric car, make sure you get a small electric car that's a hybrid. Don't go full electric because of the issues. You've seen that recall that they had with Tesla vehicles with the loose bolts and the battery. You don't want to go through that. So get a hybrid if you are going to go that way. In any event, welcome to March. After next week, the time springs ahead 1 hour. So we'll be losing 1 hour of sleep. Let me know how that affects you as well as we continue this working from home cycle. Many of the offices and businesses are hoping to come back after May when President Biden declares that this emergency is over. So let me know your thoughts on that as well. Be safe. Enjoy your weekend. I'll talk to you very soon. God bless. Bye-bye.